Another beautiful Sunday night out there. The program is Tax Matters, and the station is NTA2 Channel 5 Lagos. I am Olumuyiwa Matuduko. We have an educative package for you tonight on Tax Matters. We continue with our serialization of taxes collectible by the different tiers of government in Nigeria. If you recall, last episode we listed out the taxes collectible by the different local governments in Nigeria. Tonight we continue by listing out the taxes collectible by the different state governments. That is talking about Decree 21 of 1998. As is customary on Tax Matters, we have news for you, news on taxation matters. On issue of the week tonight, we are looking at withholding tax, and I'm sure you are looking forward to quiz of the week. There are winners from last week's quiz. Stay with Tax Matters.
What you're witnessing is the first eclipse of the 21st century. It will change the way you do business. The change from a winner to a mega bank PLC. Now you'll enjoy banking services like never before. Omega Bank, beyond your imagination.
News headlines. ICANN hosts seminar on company income tax. Lagos State Board of Internal Revenue releases guidelines on returns of income for year 2000. Manufacturers Association of Nigeria warns against imposition of illegal taxes. Brewers want excise duty on beverages cut to 10%. CITN visits Yaba College of Technology. Now the details. Lagos District Society of the Institute of Chartered Accountants of Nigeria, in conjunction with Professional Edge, is organizing a seminar on company income tax. Venue is Airport Hotel Ikeja, Lagos. It will hold from the 15th to 17th of August, year 2000. The Lagos State Board of Internal Revenue has released the guidelines on how to prepare and deliver returns of income for the year 2000. In a statement signed by the chairman of the board, Alhaji Otumba S.A. Rabiu, taxable adult residents in Lagos State are enjoined to file their returns for the year 2000 at the various area offices of the board. In continuation of its efforts to make taxation a course of study at the tertiary level in Nigeria, the Student Affairs Committee of the CITN visited the Yaba College of Technology on Thursday, 27th of July, year 2000, for discussions on the issue. You will recall that last week, the ESCO of the CITN visited the University of Abuja. Students, are you getting ready? The major breweries operating in the country have called on the federal government to reduce excise duty on beverages to 10% from the 40%, arguing that a high excise duty have led to the closure of some breweries. The chairman of Nigeria Breweries PLC, Mr. Felix Oyiwere, who made the call last week in Abuja during a courtesy visit on the Minister of Industry, Mr. Stephen Akiga, described the 40% duty on beverages as exorbitant and punitive. Oyiwere, who led the chief executive officers of other major breweries on the visit, said the fortunes of brewers had declined considerably over the years, adding also that the number of operating breweries had dropped to 6 from 34 in 1987. The imposition of illegal taxes by local government councils now constitute a threat to investment and industrialization in Oyo, Osun, Ondo, and Ekiti states, according to the chairman, Southwest Zone of the Manufacturers Association of Nigeria, Chief Benson Awoshika. Speaking at the 17th yearly general meeting of the zone in Ibadan recently, Awoshika said it was a matter for regret that industries in the zone had to be persistently harassed by agents of both state and local government on the pretext of revenue generation. He described the action as despicable and appealed to the telltales of government to put a stop to the practice. Decree 21 of 1998 is very precise on what taxes each level of government has jurisdiction on. To clandestinely go beyond this is an arrogant misuse of power, he said, adding this action has done a great harm to industries and potential investors in the areas under the zone.
Welcome back. It is still Tax Matters. On our issue of the week tonight, we are looking at withholding tax. Now, that concerns everyone doing business in Nigeria. When you make those payments for supplies made to you, except when it is expressly exempted in the decree, you are obliged to deduct between 5 and 10% withholding tax. Failure to do so attracts stiff penalties under the decree. We shall tell you more about that. We have a guest in the studio. Mr. Mosumade Adegunle is a tax practitioner. He is a partner at KPMG Nigeria.
The Lagos District Society of the Institute of Chartered Accountants of Nigeria and Professional Edge present a 3-day workshop on company income taxation at the Lagos Airport Hotel Ikeja, Lagos from the 15th to 17th of August, year 2000. Papers will be presented by J.F.S. Jegede, G.S. Nnadi, S.A. Rabiu, G.A. Farayola, F.B. Medesu, and P.S. Layade. Fees, 26,500 per participant. For more information, contact the General Secretary, Lagos District Society of ICANN, on Norfolk House, 200 Igbosere Street, Lagos, or Professional Edge, Holy Trinity Hospital Estate, 110 Biawolowo Way, Ikeja.
Good evening, Mr. Adegunle. Good evening. You're welcome to Tax Matters.
Thank you very much, Mr. Adegunle.
Now, what is withholding tax? In Nigeria, what does withholding tax mean?
Thank you very much. Withholding tax is tax that is withheld from payments that are made to suppliers. Nigeria, as you know, belongs to an international economy, and if we want to encourage foreign investors, and we have to practice tax as it is being practiced all over the world. Withholding taxes are collected all over the world, and withholding taxes generally in other parts of the world are collected on dividends, on royalty, other payments. But in Nigeria, withholding taxes are even collected on directors' fees and some others that are not relevant in other parts of the world. Even though it's said that the country is free to apply whichever tax it believes is going to be beneficial for it, we still believe, I believe that Nigeria should try to conform with what is internationally accepted. So whatever taxes we are going to be collected, we have to try and make sure it's in line with what is collected in other parts of the world. The withholding tax is not an additional tax. It is a tax that it is payment of tax in advance. And this can be deducted from whatever tax is payable by a company at the end of its financial year when it makes returns of its taxes on its income tax to the Inland Revenue. So if a company has withholding tax credits, withholding tax receipts issued for which it has already collected credit from the Inland Revenue, the company is free to make a summary of such withholding tax credits and deduct it for whatever taxes is payable on income that it has made from all the sources of income at the end of the financial year.
Who collects the withholding tax? The federal or state or local government?
Withholding taxes are collected both by state and by federal. For bodies corporate as limited liability companies, they pay to the federal government. For individuals, they pay to the state government.
Individuals in what sense?
Individuals in the sense that you, Mr. Matiluko, if you have dividends that are payable on your investment in the company, like you have shares in the company, the withholding tax that is deducted before the net dividend is paid to you will be paid to the state government, that is state internal revenue. But for limited liability companies who have shares in companies, they pay their own withholding taxes to Federal Inland Revenue Service. Furthermore, if an individual supplies goods to a company and withholding tax is deducted, such withholding tax is paid to state internal revenue to which demand resides. But if it is a company that makes such supplies such withholding taxes are paid to the Federal Inland Revenue Service.
What is the percentage of withholding taxes? Is it a flat rate, or it differs, or it varies from product to product or service to service?
It varies from service to service, and the rates vary from which type of business or contract or supplies you are making. I mean, if it's withholding tax on dividend, the rate is different. If it is withholding tax on royalty, the rate is different. If it is withholding tax on goods and services supplied, the rate is different.
Well, what is the range?
Well, the rate is between 5 and 10%.
Okay. Now, companies pay this withholding tax. I've had it said at a forum that the withholding tax is not actually a tax, but a collection device. And what that person was trying to explain was that at the end of my financial year, I have a right to make claims. Would you want to expatiate on that?
I did mention earlier that once a company deducts withholding tax from whatever payment is being made to a supplier of service, of goods, such withholding taxes are supposed to be paid over to either the Federal Inland Revenue Service or the State Internal Revenue Service. When such payments are made, the person making the payment is duty bound to collect withholding tax receipt. And this withholding tax receipt should be forwarded to the person from whom the deduction was made from the payment due to him. At this point, it is important to clarify also, or to say that it is not only when payment is made, even when the withholding tax is due for deduction, when even a company is not paid, but his account is credited. So withholding tax becomes due at the point when payment is due, when the invoice is raised, and then the payment is about to be made. Either the supplier is credited or is paid cash, withholding tax is due at the point where it is credited or when payment is made.
Thank you, sir. The comments or complaints, if you like, that we have received on tax matters from some interested members of the public is to the effect that sometimes withholding tax amounts to a loss for them. Somebody gave us an example of a company that paid him money that he was going to pay to a newspaper. This is an advertising agency who would collect X amount, let us say 100 naira, from a company to advertise on behalf of that company in a newspaper. Now, when that company was giving him his check, it deducted 10%. Ordinarily, as an advertising agency, that agency is qualified for 15% of the amount that Guardian or the Concord, the newspaper, charges for the placement. So, at the end of the day, he had 5% left, and he didn't feel good about it. Some other people have complained about their the difficulty in making claims at the end of the financial year. Do you have anything to say to that?
It is not difficult making claims, so long as your claims are genuine. What is happening now is that the business environment is not that good that to deduct 10% withholding tax from the payment made to some companies, because this 10% is on the turnover. And the situation in Nigeria now is that not many companies make 10% of their turnover as their net profit. So at the end of the day, so many companies have withholding tax credits being carried forward over so many years. And government has to address this, because there is no way that the funds are made to people who have overpaid withholding tax. The government has to put the machinery in motion to be able to allow taxpayers to be able to get their refund within a very short time. If you have withholding tax credits that are in excess of the tax you are supposed to pay, there should be a way that within a very short time you'll be able to collect your refund for the excess you have paid. Like I said earlier, withholding tax is payment of tax in advance. And when you now pay more than what you are supposed to have paid, there should be a way to be able to get a refund and get it quickly so that this money can be reinvested into your business. That system is not in place at the moment. And I think this is what government should address.
What are the common complaints of your clients, taxpayers, regarding withholding tax?
Well, the first thing I must let you know is that no one wants to pay tax. That is the first thing. And of course, people must realize that if you make a profit, then you must pay tax. And if you don't pay tax, you cannot ask government to provide the amenities that you need. A lot of people complain that, well, I don't want to pay tax because I don't get the amenities that I'm supposed to get for paying these taxes. But the truth is this: everybody should pay what is due from him to government. And for withholding tax, yes, there have been a lot of complaints. There are some ambiguity in the withholding tax law and the amendments. Take, for example, there is a part of it that says all forms of contracts except for goods and services in the ordinary course of business. What do you call ordinary course of business? I mean, ordinary course of business, somebody who is selling newspaper, who is selling photocopying papers, and he sells to a company, and the company says, I'm going to deduct withholding tax. And the man says, look, this is what I do in ordinary course of business, you cannot deduct it. So, and I didn't sign any contract with you. So, how come that say you want to, it's not a contractual service. And the man says, look, the law says, whether once you make supply and I'm going to pay you, I must deduct withholding tax. And the difficulty there is that where the supplier, the onus is on the supplier to deduct withholding tax. Where he fails to deduct, the federal revenue or state revenue has the right to ask him to pay this money, one, and not only that, pay penalty for not withholding and for not paying over, and also interest for the period that he failed to pay over to the inland revenue or the state revenue. So the person who is supposed to withhold tax has a lot of responsibility. It's like an agency arrangement, but it's not strictly that. But if he doesn't do it, then he's going to pay heavily for it. So he wants to make sure that he's in the clear. He doesn't want the Federal Revenue Service to come back to him and say, look, you didn't deduct, so you are going to pay the amount you are supposed to pay, and then penalty at 200% of the amount you should have deducted, and then interest at the prevailing interest rate, which is about 20% or 20-something%.
It's quite a lot.
It's quite a lot. So that's why everybody wants to make sure that, look, it's better to deduct. And then if you can argue your case and say you are not supposed to pay it, then you come back to us to give your money back. For inland revenue to come and we pay all this.
What other complaints have you been getting in the ordinary course of business, to use that phrase?
Well, that is the ambiguity in the laws. That is there are some of these laws that need to be re-examined again. And then there is a particular place where royalty is classified with interest. I mean, there are two different things, and this should be separated. And I think the penalty is too stiff for those who fail to deduct. And then there should be some clarity as regards on what supplies are you supposed to withhold tax. I mean, for dividend, it is very clear. If you have shares in a company and they are paying dividend, withholding tax will be deducted. If you are a director and you earn director's fees, withholding tax will be deducted. Those ones are very clear. But when it comes to supplies, the ambiguity is too much. Something has to be done to address that.
Do you really think that withholding tax is necessary?
In my opinion, I think it is. Because the situation in Nigeria is such that people are not ready to pay tax. Like I said earlier, nobody wants to pay tax. And if there is a way you can get people to pay, then government should get them to pay. I mean, if the way to get people to pay is by withholding something from what they are going to get as payment due on contract, on services, or whatever, Many companies, like I said, are not even registered with the Federal Inland Revenue Service. So how do you get such companies to even pay tax? So, but if they did not make supplies or they do business with any company and they now withhold tax from them, at least government is sure that 10% or 5% that the case may be will have been deducted from them.
Thank you, Mr. Adekunle, for
Thank you very much.
Thank you very, very much.
It's a pleasure being here.
I hope that when we call on you again, you will oblige us.
I will.
Thank you very much.
Thank you very much.
You are still on to tax matters. On our public enlightenment segment tonight, we have a list of taxes approved for collection by state governments. Now for our quiz of the week, but before then, last week's results. We received a total of 25 letters from viewers. Now that gladdened our hearts, but only 2 persons came near the answer. Here is calling on Isa Abibatu and Raphael Uche Oti Ihweku to come to our office with proof of identity to collect their prices of 200 naira each. Thank you for writing in. We encourage viewers to write in to us at our address. You can send email to us and you can phone us. There will always be somebody there to listen to your request. Now for this week's quiz. Take your pen and paper. In one sentence, define the value added tax, VAT. Repeat. In one sentence, define the value added tax, VAT. Remember, our quiz on tax matters is only for non-accountants and non-tax practitioners. So send in your answers to this week's quiz before Friday, the 4th of August, year 2000.
Only 2 things are certain in life: death and taxes.
Taxation is based on confidence.
What strategy can we adopt to make tax administration more people-friendly so that it's more...
Watch out for Tax Matters on NTA2 Channel 5 every Sunday at 10 p.m. It's informative, it's educative, it's entertaining. For sponsorship and advert bookings, contact Tax Matters, 30 McNeil Road, Saboyaba, telephone 01-868-585, email taxmatterscom@yahoo.com, or the marketing manager, NTA2 Channel 5, Ahmadu Bello Way, Victoria Island, Lagos.
Well, viewers, 30 minutes is just like a few seconds. Yet there's so much to talk about. But we assure you that come next Sunday at the same time, 10 p.m., we shall be here on NTA2 Channel 5 Lagos. Until then, please keep paying your taxes.